favorite trader here. So today I'm on your screen again and I'm about to actually share the exciting news with you. Today marks the beginning of the $100 to $10,000 challenge that I actually told you guys about, and guess what? We're actually running in profits. So I actually like called in the first trade in our Telegram channel, and trust me, it's actually going well. So what I will be doing now is to show you how I actually like analyzed the trade, and the trade I took was usdjpy. So I'm going to be sharing with you the concepts, the confluence factors I actually put into consideration before calling in the trade. And today being Monday, you all know how it is to like trade on Monday. Jesus Christ, you know market sometimes is very slow. Not even sometimes. Market is usually very slow on Mondays, but today we actually put it up. So stay tuned as I actually bring the analysis right to you.
Our analysis. So I want to share with you the trade before. This is USDJPY, the trade I took before. So this was before, I mean, like when I did the analysis, and I actually like screenshotted, like I took a screenshot of this trade today being June 26, 2023, and then this is the actual trade on TradingView. So guys, let me take all of these objects off my screen. So I'm going to like restart the analysis, and then I will share with you all the concepts, things I put into consideration, why I actually took this trade. So guys, the first thing I did was to actually go to daily time frame. Um, Normally I love to follow the momentum of the market. So I love to go with the flow, like with the big move of the market. So basically I actually like zoomed out. Okay, so zooming out now, like what I did was to put it on a line view. So with a line view concept, which is how I trade, which is how I do my analysis, you're going to see the skeletal structure of the entire market in terms of the momentum, the leading momentum, and the losing momentum. So looking at the markets, if we are to go by the leading momentum, it's actually the bullish that's leading. So we can see that the bulls have been in control here, and then there was a bit of uh, flag here, and then with this flag that we got here, which was a major correction, because you need to have a corrective move in order for you to have an impulsive move. So this correction was just a minor, should I say a major correction, sorry, a major corrective move, because this market normally is bullish. So we need to have sellers before buyers. Also, we need to have buyers before sellers come in. Now, as you all can see, forget about the overall momentum. We've seen that it's bullish. Now, this channel was um was terminated somewhere here. This is what I call trend termination zone. So this is a trend termination zone here, and this is how I trade. Basically, I call this place trend termination, like when the trend ends, like it terminated here, like terminated here. And then this place, I call this place trend reconfirmation zone. So let's see the concepts, trend termination and trend reconfirmation. So let me pull up the texts. I hardly really use text like that. I think that's why it's not added. So we have the trend termination zone. If you've been following me before, you will see that this is how I trade. And then we also have the trend reconfirmation zone. So trend reconfirmation zone. So now that we've seen that, normally, typically, people call this market break and retest. Well, if market breakout, I call it termination, because the trend it breaks, it's that the market's breaking out from has terminated. Once it terminates, it forms a new trend. Okay, and also take this off. Sorry. Now let's take this off. We are trying to keep this simple. Okay, we are trying to make this as simple as we can to enable us see the market's overall direction. So now we are going to start looking at internal moves. Look at this. Look at this movement. Look at this movement. So normally, someone would think this market is actually going to sell from here, and then it will keep dropping because of this momentum. But if you analyze this way, this is actually not the wise way of analyzing, because you're leaving behind the structure that gave you this move. This is actually a fake out. So since this trend has actually like reconfirmed, yeah, right. I look at it that okay, now the Bulls have picked up their momentum. Not only just that, this is a very strong zone indeed. This is a very strong zone. So I don't really do much of zonings. I don't really do much of support and resistance. I'm someone that go with the flow. I go with the momentum. So I'm like a momentum trader aside price action. So now we're actually like looking at it from the momentum perspective before we put in price action. So this is momentum before price action. Now after this concept, I was already certain that the market is still going to be bullish, and then on the daily it's still very much bullish. So I'm a day trader. I mean, I know that taking my trades will be around 1 hour time frame. So it's going to run for like 8 hours before it will hit TP. Today being Monday. So now I've already seen that concept on daily time frame. So what I will do is to delete all the objects. I sorry, before 1 hour I went on the 4 hour time frame, because 4 hour controls the other lower time frames. After daily time frame, you need to confirm from 4 hour time frame as a day trader. So now this is very structured now. We are no longer paying attention to the structure again. The structure we are paying attention to right now, it's on our screen. This is the structure we are paying attention to. This very structure here is what we are paying attention to, because this is the new structure. Now this is the new resistance, and this place has to be, tested or broken. Now, if a market is actually buying, what it does is it keeps destroying highs, like it keeps breaking highs. So we'll be looking forward to a high that it needs to break, and this is actually a very strong point that it has to break. Once it destroys this high, which is it's likely to happen, right? It's going to destroy that high. So but right now we are seeing that the market is still very much bullish. Okay, even though we don't have some much major supports to see, we can actually easily spot that it's bullish, and the 4 hour time frame is actually just moving towards the upside. So when I saw this before I ever took this trade, there was no formation of 4 hour time frame. There was no formation of 4 hour time frame. So I already saw that okay, fine, we have some rejections here, which is price action concept, and then sellers were already losing momentum here. And I was like, okay, this is a high time for buyers to buy. I actually need to look for some of these confluence factors that will make me go into long in this market. So what I did was to switch to 1 hour time frame at that point in time. Although I did wait, I waited a bit. The first trade I was supposed to take in the morning was GBP USD. Okay, there's something I was expecting there, but that's not the major thing we are focusing on right now. So now I was looking for a bullish inside bar or a bullish engulfing pattern before taking this trade. So as at then, if we go back to this, you will see that we have a bullish candle here. This is actually a bullish inside bar. It's not really feasible like that. It's not really an engulfing. Okay, fine. You might call it an engulfing, but let me switch to 30 minutes. That trade was on 30 minutes, right? Okay, 45. Let's see what was formed so that we'll be sure, because this confluence factor is very important. So you need to always allow this confluence factor form. Yes, now it is actually bullish inside bar. This is bullish inside bar. You can call it a hammer, whatever you call it. This was what I saw. Some people call it pin bar, but pin bar at the bottom. Pin bar, I think, is usually at the top, something like that. But this is, to me, this is bullish inside bar, because it is smaller than the last bearish candle, and then there is a series of price rejection here. I looked at this zone as a very busy zone, and this is a zone of, some people call it liquidity, but I don't do much of those times. I just trade the market based on momentum, price action, and then my confluence factor. I keep it simple. So immediately I spotted this. So as you can see, I went into buy, and then I brought my stop loss. My stop loss was around 27.9 pips or thereabout. So my stop loss was around 27.9 pips. I took a buy. It was exactly 27.9 pips. I could remember this was my stop loss. Somewhere here, 27 point something, 27.9. Somewhere here. Yeah, somewhere excuse me. Somewhere there. It's a 1 to 2 weeks of reward trade. A very basic, trade indeed. I mean, very, very basic trade, 1 to 2. So now we have bagged around 47, approximately 48 pips ongoing, right, currently. And then in the Telegram channel, we've moved our stop loss to secure our profit in case the market changes direction. But this is actually a very legit trade. And one of the things I looked at for was the momentum. Let's start again. So what did I look out for in the market before taking this trade? First of all, let me bring the text. I looked for momentum. Then for momentum, that's structure, right? Then another thing was confluence. Sorry, price rejections. Then confluence. Factors with an S. Then execution. So these were all the things I looked at for, and this is how I trade. If you've been following me before, my previous channel was Marathon Forex Academy, which I shared. My first trade there was a usdjpy market structure. I'm a very good structure trader. I don't do much of SMC, ICC. They are all the same concepts. You just need to understand price rejections, and I do more of engulfing. I'm not so much a sniper kind of guy, right? Because sometimes you get in as markets is actually reacting to prices, and then it sweeps you out, and then you get in again, it sweeps you out. So most of the time I like to be sure of what I'm doing, because when the market takes off, it's going your way automatically. So excuse me guys. So this, I mean, this trade I took, I mean, this way everything I put into consideration. So if you actually like this video, I wouldn't mind if you hit the subscribe button, and I wouldn't mind if you hit the like button, and I wouldn't also mind if you share this video with your friends. And if you've been finding it difficult to analyze markets, to see market clearly, or you need someone to take you by the hand and walk you step by step through forex markets and make it simpler, someone to help you boost your confidence, a mentor that you've been looking up to. I mean, there are quite a lot of good traders in the industry. If you feel I'm someone you can actually I mean submit to, learn from, I mean, reach out to me on Instagram at ikemini_fx, or you can reach out to me on TikTok at ikeminifx, or you can reach out to me on Twitter at ikeminifx, or you can also comment below this video. So guys, thank you.
Guys, thank you very much for watching. This brings us to the end of this very session market review on usdjpy, the first trade taken in the challenge, $100 to 10,000, that I have been telling you guys about on Instagram. So if you'd like to see more of this kind of video, this kind of content, or you want me to do more of analysis, market structure related content, price action content, market concept content, make sure you like, share and subscribe to my channel. See you guys soon.